All right, hello, welcome. Welcome back to our review kit on financial accounts. So let's look at our preparation of partnership accounts. So we look at the theoretical aspect and then solve at least one or two past questions on partnership accounts. Okay. So let's start from partners' capital. Now, each partner, of course, in a partnership, will contribute capital to the business, and then they will share in the profit or loss of the business. That's the lessons of capital partnership. So they will come together, share profit, and at the same time, they will share loss and contribute capital. Now, the capital of each partner is usually contained in two accounts. So we have two accounts. We have the capital account and current account. So we look at it together now. Capital account. Please, the partnership agreement usually specify that each partner must contribute a minimum amount of fixed capital. That means they will say that, okay, so you will contribute so, and it's fixed. That's what we call capital account. Okay, and cannot draw out any of their fixed capital. So they can't withdraw from their capital account. In addition, each partner might retain some of his or her share of accumulated profit in the business. The partnership agreement should allow partners to draw out their share of accumulated profit if they wish to do so. But the original capital that they contributed, they cannot withdraw it. Their capital account records the fixed capital or long-term capital of the partner that the partner must retain in the business and cannot take out in form of drawings. The balance on this account does not change it does not change very often. Then we have the current account. Okay, now current account is used to record the accumulated profit of the partner and the partner's the partner's drawings. Okay, the profit of the business are shared between the partners. The share of each partner is credited to or added to his current account, and then drawings. So anything that has to do with salaries of partner, drawings, and share of profit, where do we treat it? We treat it in our partner's current account. Let's start this example, this past question, to further emphasize it now. ABO partnership consists of three partners: Oka, Buhari, and Owo or Owo. The partnership agreement specifies that profit and losses has to be shared in the following manner. Oka is to take 40, Buhari is 30, and Owo is 30%. The following balances are extracted from the partnership statement of financial position as at September 30, 2022. You have cash, account receivable, inventory, furniture and fittings, account payable, and loan notes payable. Additional information. During the year, the partnership earned a profit of 600,000 naira, and interest on loan notes is 10% per annum. Partners' current account balances at the beginning of the year were Oka is 150,000, Buhari is 100,000. So they give us their salaries, and then they made some transfers. Okay, all right. Now, assume that initial capital account are established according to the agreed profit sharing ratio. A, show how the profit of ABO partnership for the year ended September 30, 2023 is shared to the partners. So we are going to share the profit. We calculate the partners' initial capital, then we prepare partners' current and capital account, making a total of 20 marks. So let's go and solve. All right, let's solve together. Okay. Alright, so let's go. So let's open. Sorry, just click it. Alright, so great. Let's solve. So we have ABO partnership. Then we look at the first thing is calculate share of profit. How do we share the profit? Okay, so let's go. So we have ABO partnership. So the first part of the questions, let's calculate their share of profit. Okay, so alright, so let me explain how we treat that share of profit. Alright, so let's go. So now the first thing we start is how much is the profit figure reported in the question. Alright, so let's go. Alright, let's look for it. Okay, so additional information. During the year, the partnership earned a profit of 600,000. So that's what we'll do first. So reported profit is how much? 600,000. Let's have two naira figures, two naira columns. Sorry. Alright. So how much? 600,000. Okay. Let's go. Then please, they told us that they have loan notes and they have interest to pay on the loan notes. and they have not told us that they have deducted it. So the first thing, before they can share profit, they must pay all their what, all their outstanding what, expenses. So we are going to what, we are going to do that. So let's go. So how much is that? Interest. So we have what, interest on loan notes, interest on loan notes, interest on loan notes. So 10%, then we go and calculate 10% of what's the value of the loan note. We check that in our statement of financial position. 10% multiplied by loan note is 300,000. Okay, so multiplied by 300,000. That will give you what? That will give you 30,000. So remove 30,000 from this. So minus 30,000. So that means the profit left from this will be minus 30 will give us what? 570,000. So 570,000. Then we have to take care of some other things too before we can share the profit. So the first thing we are going to take off is one, is there any what? Partner's salary. If there's partner salary, interest on capital. Do you understand? We remove those things before we share what? We share the remaining profit. But in this question, they only give us what? Partner's salary. Okay, so we are going to remove partner salary from the money. Okay, so let's go. So partner salary. So remove partner salary. Partners salaries. Okay, so let's go. So how much is Oka zone? Oka is how much? Let's check. Oka is 120,000. Okay, next, who is the next person? You have Buhari. Buhari is how much? 90,000. Buhari is 90,000. Okay, then next you have what? You have Owo. Owo is 90,000. Okay, so let's add. How much is the total? So the 3 will give us how much? That's 300,000. 300,000. Okay, so after they have taken care of this, is what is left that they will what? That they will share among themselves, and they've given us the sharing formula. So 570 minus 300 give us what? So 270,000. This is the profit to be shared. Okay, so profit to be shared. Profit to be shared. So let's share it now. Profit to be shared. Alright, so let's share the profit. So the first one we have is what? We have Oka. Now they give us the sharing formula. How much is Oka? Let's look at it. Oka is, I think, 40%, if I'm not sure. Alright, let's check. Let's confirm. Oka is how much? Yeah, Oka is 40%. Yeah, so 40% of 270,000. So that will be 40% multiplied by 270,000. That will give us how much? If you punch your calculator, that will give 108,000. Please confirm. 108,000. That's for Oka. Next is Buhari. Buhari is how much? 30% multiplied by 270,000. Okay, so how much is that? Buhari is 90,000. And lastly, you have what? You have Owo. It's the same thing. Okay, Owo, whatever. 30% multiplied by 270,000. That will give me how much? That also give me 90,000. So if you add it, it will give you your 270. So this is how they will share the what? They will share the. No, that's not correct. 81,000. Sorry, not 90,000. To give you 81,000. 81,000. Okay. Alright. So that if we add the 3 up, it will give us how much? It will give us 270,000. So 270 minus 270,000. So that's the first 5 marks that I've just done. So that here we have allocated this. So let's look at the next thing they ask us to calculate. After that, what else are we asked to calculate in the question? So we asked to calculate what? Calculate the partner's initial capital. In this question, so B, we want to calculate partner's initial capital. Initial capital. Please, in this kind of question, they didn't give us. We have to calculate their opening capital. It's very simple. To calculate their opening capital, we just do their what? Their we go and calculate their what's this called? We calculate the opening asset minus opening liability. That will give us the opening capital, and then we share it among them based on their what? Based on their ratio. Because they said assume the initial capital accounts are established according to their agreed profit sharing ratio. So let's go. We just pick very simple. So let's start from our assets. So what are the assets that we have in the question? Let's go. Alright, so assets. So where are you? Alright, so we have cash, Let's start listing them. So assets, we have cash. Cash is how much? Let's write it down. Cash is 250,000. All right. Next, you have what? You have your account receivable. Account receivable. Account receivable is how much? Account receivable is 400,000. Next, you have what? You have inventory. Inventory is how much? Inventory 200,000. Alright. Then furniture and fittings 250,000. F and F. 250. That's 250,000. Okay. So what else do we have? Then that's all. So let's add up. How much is that? How much is our total asset? So total asset is what? 1.1. So let's put that here. 1,100,000. Okay. We have our liabilities. Okay. So for our liabilities, let's look at the figures we have. Okay. So for our liabilities, we have accounts payable. Account payable is how much? Account payable is 120,000. Okay. Next, you have what? You have loan notes payable. Loan notes payable is how much? Alright, so loan notes payable is my loan notes payable. Let me check how much is my loan notes payable. My loan notes payable is 300,000. Okay, 300,000. Alright, so let's add it together. So then sorry, before we do that, we have their current account. So we have to do their current account. So partners current account at the billions, that's like part of their liability. So we have what? We have Oka. How much is Oka's current account? Let's check. Okay, Oka's current account. Let's call it Oka's current account. Current account is how much? Oka's current account. How much is the figure that we have here? Oka's current account is 150,000. Credit balance 150,000. Next, you have what? You have Buhari. Buhari is how much? Buhari is 100,000, but this time is debit balance, so it's going to be negative figure. Then lastly, we have what? We have Owo. Alright, Owo is how much? Let's check. Owo is Owo is how much? 50,000 credit. Okay, so let's add up. So let's add up. So we have how much? So this will give us what? 520,000. So minus 520,000. Okay. Alright, so let's remove it. How much is our opening capital? So 1.1 minus 520,000 will give us how much? Will give us what? Will give us 580,000. So that's our opening capital. Then we now share it. 580,000. Okay. So now Oka will now take how much? 40%. So we said we should do it in their sharing formula. So 40% multiplied by 580,000. Alright, so let's do that. So 0.4 multiplied by 580. If you punch your calculator, that will give you 232,000. 232,000 confirm. Okay, we have Buhari is 30%. 30% of how much? 30% of 580,000 multiplied by 580,000. That will give me how much? 30% of 580,000 will give me how much? 170. Incoming. Let me press calculator. Sorry, can't see the figure here. Well, calculator. Okay, so 0.3 multiplied by 580,000. That's 174,000. Alright, great. 174,000. 174,000. Then lastly, we have Owo. Owo is how much? To 30%. So Owo is 30% of 580,000. So please, that's how we share it. 30% multiplied by 580,000. That'll give me how much? So that will still give me my same 174,000. So if you add it, it still give you your what? Your 580,000. So let's add up the three. So that still gives me my 580,000. Okay. So we have minus what? 580,000. So that's another 5 or 6 marks. Lastly, say we should calculate partners' current and capital account. So let's start from current account. So current account, then we prepare their capital account to current account. Okay. So we have 3 partners. So we have 3 columns this time, and we have what? We have Oka, we have Buhari, and we have Owo. Then let's have a space for total. Okay, so total. All right, good. So let's go. So we have balance brought down or brought forward. Balance brought forward. All right. So that was given in the question. So we have that already. So let's check it. 150, 150. So 150,000 for Oka. This is a debit of 100,000. So it's going to be a minus 100,000. And Owo is how much? I think 150. 50,000 credit. Sorry, 50,000. So that will give us a total of how much? Let's add it. 150. This will give me 100,000. Okay. Then we'll now start looking at what happened during the year. So what are the things that happened during the year? I told you that your current account is where you treat your salary. So let's have salaries first. So salaries that each of them collected goes to their current account. So how much is their salaries? Let's check. We're giving you the question. 120, 90, 90. So let's put it 120,000, 90,000, 90,000. Okay. 120, 90, 90. Okay. So that's, let's add. So how much would that give us in total? That will give us what? 300,000. Okay. Next, their share of profit also comes to their current account. Share of profit. Okay. So share of profit is going to be how much? Let's check. Their share of profit would be, okay. So yeah, we did that. They are ones we allocated. So let's go. Where is that question we solved? So share of profit is how much? 108,81,81. So let's put that. 108,000, 81,000, and another 81,000. So making a total of how much? Making a total of 270,000. So let's add that up. Okay. Then we'll see if there's any deductions we're asked to remove. So let's add up. So all right. So this will give me how much? 150 plus 120. This will give me 378,000. 378,000. This will give me how much? This will give me 71,000. 71,000. This will give me how much? This will give me 221,000. 221,000. And lastly, this will give me how much? So this will give me 670,000. 670,000. All right, great. So then let's check the question. So they said they should transfer during the year from current account to capital account. So we have to transfer this amount from their current account to their capital account. So we have transfer to capital account. Capital account. Okay. So how much are we supposed to transfer? 68, 26, 26. So 68,000 minus 68,000 minus 26,000 minus 26,000. Okay. So if you add the 3, how much is that going to give you? That's going to give you minus 120,000 in total. 120,000. All right, let's go. So how much is it? How much is that closing balance going to be now? So all right. So let's start. 378 minus 68 will give me how much? So 310,000. This is their balance. So this is what we use as opening balance for next year. Balance carried forward. Carried forward. Okay. So this 71 minus 26 will give us 45,000. Okay. 221 minus 26 will give me how much? 195,000. 195,000. And 670 in total will give us how much? 550,000. All right, 550,000. All right. So that's that. So let's go and do their their capital account. This one is quite simple. Capital account. So for their capital account, their balance brought forward is the one we calculated the other time. So balance brought forward, let's check it. So this is the 232, 174, 174. So 232,000, 174,000, and 174,000. So that our total is giving us how much? 580,000. Alright. Then the only thing that will enter the capital account is their share, their transfer from what? From the transfer from what? Current accounts. From current account. So please, your capital account most times does not change unless you transfer to or from it, and you'll be told in the question. So we have 68,000 for this, you have 26,000 for this, I have another 26,000 for this. So how much would that be in total? So that will give me how much? That will give me 120,000. 120,000. Okay, so let's add up. So how much is our closing balance? So this is 300,000. 300,000. This is 174 plus 26 will give me how much? 200,000. Then this is also 200,000. So in total, it's going to give me how much? 580 plus 120 will give me what? 700,000 as our total capital account. 700,000. All right, great. So let's go. So great, beautiful. All right. So that's it. So please, that's the whole 20 marks that we just press. You see that this question is quite simple. We'll solve another question on capital account again. But please, like I always say, don't assume you have mastered. Please go back and solve this question on your own till you can do it very well. All right. Thank you.